Starting off at number 5, Intel. The Santa Clara giant carries a valuation of $101 billion, a fraction of its peak, reflecting the market's skepticism toward its foundry pivot. Yet the core product x86 architecture still powers the vast majority of data center servers and enterprise laptops shipping today. While revenue has contracted, the company retains a massive installed base and a process roadmap targeting 18 angstrom production by late 2025. If execution improves, the discount to peers could close rapidly. Intel's competitive shield rests on its manufacturing scale and the U.S. CHIPS Act funding that de-risks its fab expansion in Arizona and Ohio. The 2026 catalyst is the launch of the 18A process node, designed to win external foundry customers like NVIDIA and Qualcomm. Early test chips have shown yield improvements, and a confirmed design win for a major cloud provider's custom accelerator would signal the model works. Watch for the first revenue from external foundry clients in the back half of the year. Coming in at number 4, the Cigna Group, valued at $74.7 billion. The health services conglomerate operates through two engines: Evernorth, its pharmacy benefit and care delivery arm, and Cigna Healthcare, the commercial insurance franchise. Despite muted top-line growth recently, the company generates consistent free cash flow and has returned capital aggressively via buybacks. The core product is not a pill or device, but a contracted network covering 18 million medical members and a specialty pharmacy, dispensing high-cost therapies nationwide. Cigna's defense lies in the switching costs embedded in employer-sponsored plans and the data advantage of managing pharmacy spent across millions of lives. The 2026 catalyst is the $3.7 billion transaction with Healthcare Service Corporation, which expands its Medicare Advantage footprint in key states. Integration of that membership base could lift medical loss ratios and unlock cross-selling of Evernorth's specialty services. Regulatory clearance is the final hurdle, expected by early third quarter. At number 3, NextEra Energy, commanding a valuation of $179.8 billion. The Juno Beach utility is the world's largest producer of wind and solar power, with a regulated Florida utility providing a stable earnings floor. The core product is electrons, specifically clean megawatt-hours sold under long-term contracts to corporations and other utilities across North America. The energy resources segment operates thousands of turbines and solar arrays, generating predictable cash flows indexed to inflation. NextEra's advantage is its development pipeline, over 20 gigawatts of signed renewables contracts, and a cost of capital lower than any independent power producer. The 2026 growth driver is the Inflation Reduction Act's tax credit certainty, which locks in project economics for a decade. Meanwhile, the Florida utility is requesting a base rate increase tied to grid hardening investments. If approved, the regulated return on equity expands, compounding the clean energy cash machine. Runner-up at number 2, Eli Lilly, valued at $1.05 trillion. The Indianapolis pharmaceutical titan has transformed into a metabolic powerhouse, with its GLP-1 franchise driving unprecedented demand. Manufacturing capacity expansions in Indiana and North Carolina are coming online, aiming to double output by year-end. Every dose produced finds a patient immediately. Lilly's fortress is built on patent protection extending into the 2030s and a manufacturing edge that competitors cannot replicate quickly. The 2026 catalyst is the potential label expansion for tirzepatide into obstructive sleep apnea and chronic kidney disease, which would unlock massive new patient populations. Additionally, the oral GLP-1 candidate orforglipron enters late-stage data readouts this fall, a pill formulation that could bypass injection hesitancy and broaden the market exponentially. And topping our list at number 1, Broadcom, valued at $1.87 trillion. The semiconductor and infrastructure software conglomerate delivered fiscal Q2 adjusted earnings per share of $3.38, beating estimates. The core product driving the re-rating is its AI semiconductor solutions suite, custom accelerators, and networking chips that connect GPU clusters at scale. That segment surged 106% year-over-year to $8.4 billion in the first quarter, proving hyperscalers are locking in Broadcom's silicon for the next build-out cycle. Broadcom's dominance stems from its dual-engine model, mission-critical networking ASICs that have no second source, and a sticky software portfolio anchored by VMware. The 2026 catalyst is the ramp of 3.5D packaging technology, enabling larger custom XPU dies for Google and Meta. Management has guided for AI revenue to exceed $50 billion this fiscal year, a trajectory that would make it the second-largest AI chip vendor behind only NVIDIA. The backlog visibility extends through 2027. To recap, Intel at 5 offers a high-risk, high-reward foundry turnaround. Cigna at 4 brings a managed care compounder with a Medicare catalyst. NextEra Energy at 3 delivers regulated yield plus a renewables growth engine. Eli Lilly at 2 owns the metabolic franchise with pipeline optionality. And Broadcom at 1 controls the connective tissue of AI infrastructure with unmatched revenue visibility. 5 distinct theses, each tied to a structural tailwind that should persist beyond the current quarter. This content is for informational purposes only and does not constitute financial advice. Consult a qualified advisor before making investment decisions.